type of presentation and a research type of call for sure. But let's go ahead and get started. Like always, first things first, is this company going up or down? And then should we be going long or should we be going short if we're trading? Right. So let me know in the chat, should we be going long? Should we be going short? Right, down and short. Good. Good. Good, 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 good. Now, y'all have heard me say this before. If the institutions are rotating their money into another sector, tech, right, and that money is leaving from one sector, causing another sector to go down, should we or should we not be long-term invested in the sector that is down? Yes or no? Let me know in the chat. And if you don't know, put I don't know. Right? It's okay to not know. It's perfectly fine. Right? So if the market is going down or if an asset is going down, right, we want to short it, right? The momentum is going down. So trading wise, we should be shorting it. But guess what? Long-term investing wise, remember talking about where we want to buy assets at? You want to get the asset when it's extremely far from the high, right? So not only should we be shorting this to the downside, but we should be long-term investing in this company. Next slide. Should we be going long or should we be going short? Trading wise. Let me know in the chat. Give me feedback. I can't help you guys if you don't help me, right? Let me know, should we be going long? Should we be going short? Is the price going up? Is it going down? Long. Good, right? So we should be going long. That's obvious. And guess what? If the stock is near all-time high, you don't have to do anything. You don't have to do anything, right? If the stock is at an all-time high or is near all-time high, you do not have to do anything. It's up there for a reason. Why would I want to buy anything at an all-time high, right? Investing is super easy. We need to treat it like we treat buying everything else. So if something goes on sale, 20, 30, 50% off of the high, that's when I want to buy it. I don't want to buy things when they're at full price. Next slide. Up, down, ranging. What are we doing? What you guys see? Let me know. And then pay attention to the dates at the bottom as well. That should help you. Right? And if you don't know, put I don't know. It's perfectly fine. Sideways, 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 up and long. Yep. Sideways. Yep. So all of you guys are correct, right? This is why we got to pay attention to the time frames. So if we look at 2020, from probably January 2020 to July, right, the asset was going up. So it was going long. Then from there, like mid 2020, all the way till probably like 2 or 3 weeks ago, right, this asset was going sideways. So if it's going sideways, you can wait, you can build your base at the bottom, and you can trade it going up and going down, right? But now the asset is continuing to push higher and it's going up. It's at an all-time high. So do not let this range or going sideways confuse you, right? It's still at an all-time high. So do not get confused. We have to make sure that we are paying attention to the time frames at the bottom and paying attention to the market structure and the time that the asset is in the market structure. Here's a tip for you guys when you are trying to invest, right? If the company does not have total domination in the market, I do not want to own it. Competition is for losers, right? And this is in anything you do. This is in sports. This is in life. It does not matter what you do. But the best businesses, they do not compete. They dominate, right? So me, if I am doing something, I want to be the absolute best. I should not have any competition at all. I should know my field. I should know my craft and make everybody else intimidated by me from what I'm able to do, right? So when you are looking to invest in a company long term, they should have that exact same feeling and give that feeling to other companies, right? Apple, I have not seen another company in the United States, right? China is an exception, but in the United States, I have not seen another company that has even attempted to build an iPhone or anything close to an iPhone, right? Meta, please tell me they competition. They don't have none. Snapchat is not competition. Pinterest is not competition. Twitter is not competition, right? They are in a market that they totally dominate. So if you want to make sure that the company that you are investing in is actually going to do well, make sure they have complete domination in the sector. Going back to what I've talked to you guys over the last few times, right? And to stay away from companies like RGTI and IonQ. Please answer this question. If Google goes to the CEO of RGTI and says, "Hey, here's 30 billion. We want to acquire your company," right? We're going to merge your company into our company. You can still be the head of that department. Now, if that was you, would you or would you not take that deal? Be honest. Somebody put 30 billion in my face. I don't know. Right? Would you or would you not take that deal? Right? Now we can say up and down all day that we're not gonna take it, but I promise you, if they pull that suitcase out and they show you that money vault with $30 billion, it's gonna be hard to say no, right? Because guess what? You're still the CEO and you're still the head of that department. So even though you merged with Google, you got 30 billion and you still can continue to operate that company and be the head of that company. So I want to ask you guys a question. Do you guys really think that Google, Apple, Microsoft, Nvidia are not going to all these other companies and doing that? So if RGTI was really that important and they really had this groundbreaking technology, Google and Apple and all these other companies would be scared of it. So they would definitely go to them and offer them money so they could have a monopoly, right? The truth is, once these companies get to a certain level, when they get to the top, all they're going to do is play monopoly. Literally, they're just going to buy up all these other companies that they see as competition so that they do not become competition. Intel's problem was they did not acquire Nvidia, AMD, AVGO, right? They got complacent. They lost their edge. And that's what allowed all these other companies to rise, right? It should have never happened, but Intel let it happen on their watch. So when you are investing in a company long term, you need to make sure that they have complete and total domination. Now, I want to be honest with you guys, 100% honest, right? Inflation is going to keep going up. So I'm not even trying to convince you to invest, right? But you have to. You have to. You do not have a choice, right? On the other presentations, I talked to you guys at the beginning of the year, we're already starting down 7%. Every single year, you're going to lose about 3% on your cash every single year, right? Inflation is going to keep going up. So if you add inflation and the amount that you're losing on your dollar every year, that's around 7% per year that you're losing. So we're already in the whole 7%. We have to invest. But tariffs, right? He's trying to put tariffs on this is Donald Trump, right? He's trying to put tariffs on China, Mexico, and Canada. Those are the top furniture exporters to the US. So furniture is going to continue going up. Home prices are going to continue to go up, right? Anything dealing with a home is probably going to go up. Now, the death of malls, and it's not just malls, right? It's brick and mortar all over. E-commerce is taking over. So any company that has a large number of buildings that they are hosting and operating, they're going to lower that number, right? They're going to close down a lot of stores, and that can be a sign of trouble for that sector or for that industry. So, Target is a prime example, right? Because guess what? If those tariffs go up, right, or those tariffs go into effect, who do you think that price is actually going to get passed on to? It's not going to be the company. They're going to make sure that they pass that price on to us. So if their margins on a company level are getting squeezed, right? What do you think that's going to do to us? So inflation is going to keep going up, and we have to make sure that we are investing, and we have to make sure that we are learning how to trade. Now, I told y'all, right? This is not a game. It's really not. I don't know how else to explain it. This is financial war. The stock market, literally every nation and every company on earth wants a piece of it. China is in our market. Japan is in our market. Europe is in our market, right? They're all investing in US equities, aka US stocks, right? But then in our country, you have people and you have all of these things going on, right? Billionaires are going to war publicly over assets and markets, and that shall let you know that money in America is tight, right? Every major company is thinking about creating a Bitcoin reserve. So if all these other companies are trying to hoard assets and continue to buy up the assets in a few years, right? When all the asset prices are super, super high and people get priced out, who do you think that is going to affect the most? The people at the top or the people at the bottom, right? So we have to make sure that we are taking this serious and not treating it like it's a game, or we cannot treat it like it's gambling. We cannot. We have to have systems in place. We have to have rules in place. We need structure. But money is not going to change a man or a woman, right? It just unmasks them. So if a man naturally, if he is selfish, arrogant, greedy, the money brings all of that out. So I can name a lot of people. I'm not, but I need you all to pay attention to everything that's going around and what's happening in the economy, right? But this is Congressman. He literally sits on the committee for railroads and infrastructure, and he bought shares of the railway company. Now, I can sit up here and complain all day up and down, right? That this is not fair. It's been not fair, right? We have to get over it. This is exactly why us as individuals, people, we need to have system plans and strategies when we do everything, because it's not being played fair. It's not. So you can come into the market and try to get rich quick. I'm telling you, that is going to be a financial mistake. Instead of trying to learn the process and do things how we're supposed to do and compound over time, that is going to be a financial mistake. Now, I promise you, I know, right? I promise you, I've been there, right? I know if you're losing a trade or you lose on the investment, right? You're like, I keep failing. That's literally the point, right? That's literally the point. The difference between successful people and people who aren't successful, they literally fail more. Successful people fail more than unsuccessful people try. Going back to building a light bulb, right? I'm not going to get into that, right? But we can talk about who really created the light bulb. But the person that they said created the light bulb, right, tried over 1,000 times before he got it right. But guess what? All it takes is one time. That's all you need. One system, one strategy, one plan. You are one thing away, right, from having something special and having something great. And sometimes you just got to admit that you got distracted, right? Because a lot of times we get distracted and we're not focused, right? And we're trying to do something and we're wondering why it's not working, but we're distracted and we're not focused. But you have to ask God to put you back on course. It's okay, right? The first step is actually acknowledging wrongdoing. We have to first acknowledge that you're doing something wrong, or acknowledge that what you're doing is not working, so we can then start to figure out how we can fix it. And I promise you, none of this is luck. Nothing that is going to be sustained or last in life is going to come from luck. That's why 80% of people who win the lottery, they still go broke after, because yes, they got the money, but guess what? They didn't go through the compound. They didn't go through the failing. They didn't go through the obstacles that was going to prepare them to keep that money, right? So we need to make sure that we are preparing and we're doing everything that we need to do. So when we get another opportunity in 2026, right, when the market is going to come down, that we're ready. We are focused on the wrong things. I need you guys to please, please, please pay attention to this slide. This is probably one of the most important slides that I have ever showed in all of the presentations that I have done, right? We us as retail investors. Most of us are focused on the wrong thing. So, the meme coin, right? The Trump coin. First of all, right, it's down 63% from the high. Okay. But I saw everybody, I had so many people text me, call me, hey, what do you think about this meme coin? I need to buy it. How do I buy it? Right. First of all, let's put some context around it. Only 500 people really got in that investment to make money. And if you are not around in that circle, it's called a syndicate, right? If you are not in that inside circle, you are not going to make money on that coin. It's not for us as retail investors. It's not in our best interest to invest in assets that are publicly owned by politicians or people who have super high political power. I'm not saying that you cannot invest in a company that Nancy Pelosi has invested in. That's not invested in. That's not what I'm saying. If they created it, you should not invest in it. A business is different, right? Elon Musk, he has a lot of different businesses, right? Invest in them. But a coin, no. Do not get caught in the retail speculation side of things, or you will never ever invest again in your life. And I want to ask you guys a question. If you have an 80% drawdown in your account, right? So if you would have bought this Trump coin and it dropped down 63%, are you actually going to be able to keep investing after that? Right? Going back to how investing is really psychological, right? It's a mindset. So if you are not able to take a 60, 80% drawdown, then you do not need to be investing in meme coins. Going to the left side of the screen. Retail buying sentiment has reached a local high. This scares me because if you look at the bottom, it's CTA positioning, right? And CTA, just think of it as an investment professional, right? When you hear CTA, I want you to think of an investment professional. They're offloading equities. So the first thing I asked myself when I saw this, are retail investors pushing the market up? So there's a report that came out, it's 35% of people invested in the market are retail investors, highest level it's ever been. Are retail investors buying at highs and continuously pushing the market up? Now I got to do some more research to confirm that, but that's something that I'm worried about. Because in 1630, when you had the tulip bubble, right? This is going back to making sure we're doing our research and we're understanding our history, right? In 1630, you had the tulip bubble, where a lot of retail or everyday people were buying up tulips because the price was increasing, literally for no reason, honestly. And then guess what? When everyone comes to their senses and those prices go down, you have nobody to sell it to. So you bought those assets for no reason and they have no value. It's the same thing as buying an asset at an all-time high, right? Buying an asset at an all-time high is just as bad as not owning the asset at all. It's actually worse. Because if you have a 30% drawdown in the asset, yes, you'll make money probably over a 2-year period easily. You'll probably get like 13, 15, maybe 20% if you're lucky, right? But the psychological level for you to keep investing after that is probably a low chance that you're going to invest. 1980 Japanese asset bubble, same situation, right? Retail investors, they were leveraging money to invest in Japanese assets. And guess what? When the market came down and crashed, 2000.com bubble with us, same thing. This goes back to 1929, right? We had that depression in the US where a bunch of US retail investors were leveraging credit, debt, all type of stuff to buy US assets and invest in the stock market. And then when everyone came to their senses and those asset prices went down, we were down for a 10-year period. We didn't even get back to the high of 1928 until like 1940. I think it was 1943 to be exact. Took almost 20 years, right? 14 years. 2020, same thing. What's the difference between these meme coins now and the meme coins in 2020? All of a sudden we acting like it's different. It's the exact same thing. For every meme coin that you see that goes up, it's probably 1,000 of them that have gone down. Going to that Hawk Tua meme coin, she facing legal action now because of what she did with that rug pull. And then in 2015, you had a Chinese stock market bubble. So all of this is repetition that continuously happens over time and is going to continuously happen again. But us, everybody that is on this call, I want you all to be smart enough to make sure that you are not buying assets at an all-time high, because if you do, and if you choose to invest in these meme coins and you continue to try to play the game, right? Going back to blocking out the noise, all of this is done on purpose and done by design. Why do you think sports betting has caught traction recently? Right? It's no different from playing the Powerball or buying a lottery ticket. It's just now put in my generation's face, right? Gen Z, right? There's no real difference between a meme coin and a Powerball lottery ticket. To me, there's no real difference, right? You got, honestly, I would rather you buy a lottery ticket because your drawdown is a lot less and you only spending 15 probably to $100 on it, right? So please do not get caught like every other retail investor that's going to get caught in this cycle. Because when global liquidity comes down and the market comes down in 26 or 7, a lot of them are never ever going to invest again, and they're going to blame other people. They're going to blame everybody but themselves. They're going to say the stock market is a scam, right? Heard that one so many times, especially in 2020. The stock market is a scam. No, it's not a scam. We have to have rules, systems, and plans in place to prepare for this stuff before it even happens. Here are some trading tips for you guys, right? Always protect your downside first. If you average down, let me ask you guys a question. If you average down into a play and it doesn't work, then what? You were down 50% and then you average down, right? And then it keeps going lower. Then what? A lot of us were trading and we're not factoring in the downside at all. The downside is one of the most important things that you need to focus on, right? You need a system that works in every market. So you can go on tipranks.com and you can see if you want to do earnings, right? Maybe I don't like it, but you can do earnings plays, right? You can go to tipranks.com and you can see how the asset performs after earnings. But that system does not work in every market because guess what? When you have an earnings recession or you have an environment where only 10 companies are holding up the market and only 10 companies are reporting good earnings. We got a big earnings week next week. So we're gonna really see all this AI spending that all these companies been doing, right? We're gonna really see if it's really working, right? But you need a system that works in every market. I don't think, or from statistically what I've studied, that is not gonna work in every single market, right? And the best traders, this is not from me, this is from someone else, right? Steve Burns, an amazing trader. The best traders are calm in every market condition. They manage their risk as a top priority first. You have to be able to filter out what really matters and ignore predictions, opinions, and forecasts. Now, I do that on my own, right? I have my own predictions, my own forecasts. That's something that I've been able to figure out myself. But I don't watch CNBC. I don't care about them saying that NVIDIA, they think it's going to drop here or it's going to go here. No, I'm smart enough to figure it out on my own. You are too, right? And above all, they have a strategy with an edge that fits their own risk tolerance. So all of us, yes, we can trade the exact same strategy, right? But risk tolerance wise, if you're 50, your strategy should not be as volatile or as risky as someone who is 30 and under, right? And coming from someone else, it's a big fan of specialization. I talked about it before, right? Focus on one setup and knowing it like the back of your hand. Instead of trying to switch indicators and instead of trying to figure out multiple different indicators or pair your indicators, you need to optimize one. Optimize one. So if you're going to use RSI, you need to optimize RSI. You need to figure out its strengths and its weaknesses, right? Trading is literally the same as playing a sport. You have strengths, you have weaknesses, you have to figure them out so you know in what environment you are going to do best in what environment, you're going to have to do something a little bit different, right? You don't need to change anything, but maybe lower your target, right? Lower the expectation of the return that you think that you're going to get. And I need you to practice like you never won and perform like you never lost. So me, when I'm back testing and I'm looking at my past trades, I'm literally looking at it like I've never ever won a trade in my life. I got to continuously get better. I have to continuously evolve, right? And this is not even just in trading. This is as an individual human being. The whole point of life is to keep evolving, right? We have to follow God. We have to read books. We have to seek information, right? We have to do all of these things because you have to be a better person. Because if you are a better person, then everyone around you is going to benefit from you being a better person, right? A lot of times we try to help everyone around us and we try to make everyone around us better. I get it. Trust me, I understand, right? But the best thing you can do is be the best version of yourself so you can then be the best version of you. 3 things I need you guys to study. Please write these down and please study them, right? Classism, front running, and Keynesian economics. Classism, front running, and Keynesian economics. I need you guys, please, to write these down and research them. All I'm asking is you just put it in Google and you spend like 5 minutes on each one. It's not going to take that long. 5 minutes on each one. So just take 15 minutes out of your day, put this in Google, and understand these topics because these are probably the 3 most important economic factors that is going to literally shape our economy for the next 20 years or so. Knowledge makes a man unfit to be a slave. I'm not talking about race. You could be a slave to your job. You could be a slave to your thoughts. You could be a slave to your fears, emotions, your environment, right? But at some point, we have to love ourselves enough and the people around us to break out of what's holding us captive and seek the information that's going to free us. So I told you guys about one of my situations, right? Where I was trying to get some information and basically they told me no, right? I had to go and do the research and get it for myself. And I use that every day to push me. You have to you either have to be you have to get upset. You have to be so upset that people are not willing to give you the information or people are not there has to be a change at some point. You have to be upset at creating the same thing over and over and over, right? Like at some point it has to change with us. Like you have to get tired of your family cycle going through the same thing over and over and over again, right? You got to get tired of it. Like you have to get tired at some point and say, I am going to seek the information that's going to free me, no matter what it is. This is not just applying to the market. This is applying to all assets and phases of life. Going back to trading and investing is more so about looking within yourself to truly understand who you are so you can understand how you can trade and what are your strengths and weaknesses in trading, right? But now is the most pivotal time in history. You do not have a choice. I'm telling you, you do not have a choice. So we have to make sure that we are seeking the information that is actually going to free us. Now, I understand we have a lot of stuff going on in our country, right? I know. But we are in a national downturn while other countries are rising. And this is at the highest level, right? There's nothing higher than nation versus nation or country versus country. Right now, it would be amazing if every country on earth could come together and then we can all try to go to other planets, right? Move as one. Just imagine if everybody on earth woke up at the exact same time, right? Like it's nice to think that one day that would be possible. But right now, we way far away from that. That's not gonna happen, right? This is at the highest level. In America, we are lacking innovation, productivity, adaptability. We're lazy, and we have political unrest. Like healthcare being big, is actually a key sign that a nation is falling because we got too comfortable, right? A lot of the products that are being made in the US are luxury type services and products. DoorDash, Instacart, Ozempic, right? All of these things are luxury services, right? So I want you guys to pay attention. The big cycles, right? Paying attention to things that actually matter. Countries rise and fall in 75 to 150-year periods, right? Some of us, we can't even bear to look at our account for one day. I know, right? At some point, but we have to get over it at some point and start paying attention to the stuff that really, really matters, right? We have to look at our country because just like the market is a business, America is a business. All these other countries are businesses and they are trying to compete for the number one spot. But economic financial position is unfavorable. Maybe Trump in the administration, from what I've seen, he's trying to make it better, right? He went in and got an all-star team, a financial wizards, I would say, to try to help America in the issues that we have, right? But for right now, it's still unfavorable. Debt. We have very, very high debt. And guess who owns it? China. The country that's right behind us. Our growth is not expected to grow that much. Internal order. Internal order is politics, right? Do we actually believe in the leadership that we have as a country? Wealth and value gaps, larger than it's ever been before. Internal conflict, high. External order, do we have control over other countries right now? Yes. Is it at risk? Yes. Right? Our military, some personal insight. It's a lot of people who are just going to the military just because they want free school, right? A lot of our veterans are not taken care of like they're supposed to be taken care of. So the patriot, like that, what it means to be an American and what it means to be a patriot and be patriotic is not there no more. So is that a good thing or a bad thing? It's probably bad. Education. Now, it says very strong. Yes, we have some of the best universities in the world. That's why a lot of um when a lot of people are born in other countries, they migrate to the US so they can go to the top schools, right? But in other countries, from everything that I'm researching and everything that I'm looking at and everything that I'm learning, right? How is it they are more innovative and more creative than us? And we have everything. We have everything in America. Anything like we're literally in luxury. In every other country, right? They don't care about luxury. They don't. They care about working. They care about getting a good education. They care about setting their family up, right? We're distracted. Reserve currency, we're good for the moment. Innovation and technology, wait till we get to this next slide. Economic output, we're okay. Trade, we gonna be good, right? But competitiveness, we want to be competitive, but we're not taking the actual measures to be competitive. We need a whole financial reconstruction of the school system. Because if I look at other countries, they learn AI from kindergarten and up, right? So again, the real measurement of the markets are dependent on the innovation, creativity, productivity, and collaboration amongst the citizens within a country. 75 to 100-year cycles. It's not just dependent on economics, right? It's not just dependent on if NVIDIA is able to make a new chip. It starts with the actual people of that country, and leadership is the number one indicator of a nation's success. You look at any army, you look at any war, It all came down to leadership. The people within the country have to actually rally behind the person and believe in that person enough to follow their policies and follow their plan for the country to continue to do better. Now, China and DeepSeek, right? Largest threat to U.S. equity markets. They built a they built the AI model and algorithm. Like, let's not forget that the U.S. said that no, you can't have certain NVIDIA and AMD chips and AVGO chips, right? So we stopped all that. Still couldn't stop them. So they did it with less money, less access, less tools. All these companies in America are spending billions and billions and billions of dollars on AI and data center and all this stuff. Like, it has to show somewhere. If they were able to do it in 2 months with $6 million, and it took us this long, I'm worried. And then if you just look at what the stuff that China has and the way that their economy runs and all the technology that they have, everything that we're building in America is basically to catch up to China. Like, now we're talking about robots and all this stuff. China been had all of that. They've been had it. So everything that the US is doing, like, China can be a leading indicator of what sectors are going to do well in America, because literally what we're doing is copying them, basically. But we're supposed to be the number one, right? They can hide it in the media, they can hide it in the news, they can hide it wherever they want to, but this data don't lie. It does not. And the real GDP growth for countries in 2025, India is going to be the fastest growing country, right? GDP is the closest thing that you can get to analyzing a country. It's like analyzing a balance sheet of a company. GDP is very, very important. We're behind China, right? What are we? Sixth? We're sixth. So we got a lot of stuff that we need to do and a lot of stuff that we need to focus on. But at the highest level, everybody want to argue and go back and forth with each other and argue over assets. Again, that's telling you that the money is tight in America. So we don't have that long, right? But we need to get refocused. And us as individual people, we need to make sure that we are doing everything in our power to collect assets so we can be good going into 2030, 2031, 2032, right? When the market comes down to 26 or 26 or 27, you need to accumulate as many assets as you can. You need to go on a buying spree like never before. So we can be ready and we can be prepared for when America is not the number one nation anymore. Right? From what I see and what I'm looking at, it seems like they're doing things, they're trying, right? They're trying. But I also ask myself, is it too late? Here are 5 movies I want you guys to watch and 1 book I want you guys to read so you can understand what the future of the world is going to look like. Ready Player One, right? That's very, very important for you guys to watch. Avatar 1 and Avatar 2. So all that Neuralink stuff, go look there. The Lorax, air pollution and the trees being cut down and artificial trees being made. Like, we trying to bring a woolly mammoth back, but we not focused on global warming and air quality, and water is going to become more and more expensive over time, right? iRobot, going to show you the technological sides of things. And Wally really has kind of already played out, but it's going to show you how people are going to get more and more lazy. We're going to get more and more focused on e-commerce. We're going to get more, everything is going to become digital like it already has, but I'm telling you, it's going to be another phase of it. And these are all PG movies that you guys can watch, right? You can watch it with your family. and then 1984. It's a banned book for a reason, but I need you to go watch it, or I need you to go read that book because it's basically going to tell you how all the countries are going to come together. So if you pay attention, right, Europe is talking about they trying to fix their relationship with us, and we might have a little war with Mexico, right? But eventually, we already have it now. But nations are really, really going to have to pick a side, and you're going to have to stay on that side. You're going to have to. Now for this week's investing outlook. Um, Monday we got new home sales, so that's going to talk about the job market. Tuesday we got durable good orders. S&P Schiller Home Price Index, very, very important, and consumer confidence. On Wednesday, we got advanced U.S. trade balance. It's important because that's going to show you like our trade balance and deficits with other countries, which then people in political power are going to make their moves off of. We got advanced retail and wholesale inventories. We got the interest rate decision. They're not going to do anything. I'm telling you now. Jerome Powell is not going to move based off of what Trump is saying, and then Trump is probably going to maybe fire him. He don't got that power, quote unquote, but we'll see. Right. Thursday, you got GDP. So how much did America grow? How productive was America? You got initial jobless claims, pending home sales, all important. Employment cost index. How much is it costing employers to employ people, right? Personal income, personal spending, PCE, personal consumer expenditures, and then core PCE. We got a lot of earnings on Monday. You got SoFi, AT&T, Nucor. Tuesday, you got Boeing, Lockheed Martin, GM, Royal Caribbean, JetBlue, Starbucks, Stryker. Wednesday, you got ASML, T-Mobile, ASML is going to be earnest. I told you guys to buy it already, right? ADP, Progressive, Tesla, Microsoft, Meta, ServiceNow, Waste Management, IBM, Levi. I forgot what RLRCX is. Maybe it'll come back to me. Thursday, we got MasterCard, Caterpillar, UPS, Shell, Thermo Fisher, Apple, Visa. Bless me. Intel, Decker Outdoors, KLAC, and Friday you got ExxonMobil, Chevron, and Phillips 66. For futures, I'm long the Nasdaq. I'm long ES, which is S&P 500 futures. I'm short the Dow. I'm short the bond market, and Bitcoin I am long. And this week is going to be driven heavily by policy, economic data, and we have a lot of earnings names reporting as well. And it's going to be very, very important to pay attention to the market overall, starting with politics, economics, then earnings. And we need to also pay attention to world conflict and everything that China is creating and everything that they are doing on an innovation level there.